Hey, Greister, I'll try and answer your question here about this first time back. I'm assuming this is the only question you're asking here. Just will you touch trade this first time back area here? So I'll just go to the chart. There's your area here on the chart, the 4-hour time frame, like you've shown there, 4-hour euro pound. So on the 4-hour euro pound. Now, what you want to do is look at the first thing you want to do is look at the lower time frame. Now, what I'm seeing here, first time back, you'd say, yeah, you got a good point there. That would have been a good entry. But you want to start looking at the lower time frame, see what's happening in that area. So what you want to do, drop to 1 hour, 30 minutes, just see what happens. Now here you're seeing something interesting. You've got a liquid gap, a spot, what do you call it? Gap, sorry. You got a gap in that area. So price has just shot through. So to me, there's a lot of volume gone in, or it could be news or something's happened there. It's just put the push to just gap straight through price there. So there's some strong reaction there. What's going on? And then you go to 15 minute, you can see same thing again. Now here you couldn't even get in on the move, even if you wanted to, for a push long, if you wanted to go long. So it's just spiked straight through the area. Now going on that, I'm sure a lot of people would have been caught out on the orders on this trade here because they would have just had orders just sitting there ready to be triggered to go in. So they've just set it and forget it and then come back and it must really have been triggered, definitely been triggered, and then they're stopped out because they would have gone, like you're thinking, maybe a first time back, they might have thought about going long, but it's been triggered. And as you can see, it's been triggered here. It would have been triggered around this area here, then stops below the area, and then they're stopped out. So their long has automatically been stopped out pretty quick. They're basically as quick as they got in, they got out. But looking at the whole structure of the price here, what you want to be looking at is what's happening on the left-hand side here. Now on the left-hand side, you've got a nice big pole here, a clear solid liquid gap here. Now what you look at, it's ignored supply here, so it's just shot through and it's closed at the high, so it's ignored that whole area. Then it's formed a type of compression here. People might say it's not compression, but to me, it's, I don't know, it looks a bit like compression to me. But if you look at this bar here, this red wiki bar here, it's cleared out orders both sides of the market here. So they've cleared out all the orders, and then they've just built up a little volume here, to push it higher, and then they formed the second pole here. Now these sort of pole areas, I look at them like compression. The price can slice through them pretty easily when they come back to them, but at the same time, there's something else I'm going to point out in a second. Price will slice through them pretty easily, so you can see price goes, and then what they do is slice down and go down to the source of the move up, or the base of these poles, so easily slice through. So here, this pole here, price is sliced through straight to the base of that pole, then it's sliced through to the compression, the base of the compression, and next target I would have thought here to the base of this pole, but looking to the left, it's ignored all this supply. Now, when you get liquid gap ignored supply like this, usually, not always, but price will react the second time when it's ignored it the first time. The second time it comes back, it will react. So you see all this reaction here is reacting to all these orders across here to the left-hand side. All this ignored supply. So it's reacted the second time, bouncing around. Now, looking here, it might carry on up, but it might actually just go to the base of this pole here. Like I said, tends to go back to the base of these poles and then carry on back up again, or it might just gap straight through down. But it tends to go to the base of the poles and fill in compression to basic compressions and like so. But going on what you're saying here, okay, yeah, you could say first time back, but you want to look at the whole price structure, what's going on to the left here. And then fine-tune it down to the lower time frames just for your best entries and that. And as you can see, there wasn't really much of an entry to get in there as prices just, if you look at all the time frames, you can just see it's just spiked straight through the area. So if you wanted to go long on a first time back, you didn't really have a chance to get in. And the only ones that would have got in are the ones that put just their orders just sitting there, waiting to be triggered to go long, but obviously within minutes, they've just been stopped out because they would have most probably had their orders, their stops just below this level here, and they would have been stopped out. But if you, as I said, if you drop to lower time frames, you can see the entries you wouldn't have really had much of an entry. Closest dot was here because he couldn't even get up there. The cells were so strong, couldn't even get close to the area. So there wasn't much chance of getting there. So hopefully that has helped you guys start answering that question. Cheers, mate.